Hi everyone, welcome to part 1 of Consumer Arithmetic. In keeping with the syllabus, we will be covering the following topics: discount, sales tax, profit and loss, hire purchase, interest rates, appreciation and depreciation, as well as solving word problems involving currency conversion, utilities, and wages. There will be 2 videos. In this video, we'll cover half, and in another video, we'll cover the rest. Now, I know it sounds like a lot, but don't worry. When we go through each topic and examples, you'll realize how simple these questions are. I assure you, if any of these topics come in your exam, you'll be glad because they are not difficult. So, let's get started. The first topic we'll look at is discount. And we're all familiar with it. It's a deduction of the marked price of an item. So let's say you're shopping for that dress or suit for grads, and you ask about the price. Well, I'm sure after you hear about it, you'll ask, is there any discount on this, or is there any sale? When calculating for discount, it's simply marked price minus selling price, and it can be expressed as a percentage of the marked price. Let's look at this example. A dress is marked at $200 and sold for $160. What percentage discount was given? So we know to calculate for discount, it's marked price minus selling price. So $200 minus $160 will give us $40. And to express this as a percentage, it would be 40 over 200, which is the marked price, multiplied by 100, which will give us 20%. In number 2, an item of jewelry marked at $900 is discounted by 20% for cash payment. Calculate Part 1, the discount, and Part 2, the price that a customer will pay when paying with cash. In Part 1, the discount would be 20% of $900, which is equal to $180, and in Part 2, the cash price would be equal to marked price minus the discount, so 900 minus 180, which is equal to $720. Let's move on to the second topic, sales tax. Now, a tax is a compulsory financial charge which goes to the government to fund public expenditures. In most countries, customers are charged a sales tax, or VAT, that is, value added tax, on goods purchased, and this is expressed as a percentage of the selling price of an item. For example, a company sells a computer for $900. How much does a customer have to pay if VAT is added at 15%? To calculate VAT, it would be 15% of $900, which is equal to $135. Therefore, the total cost would be $900 plus $135, which is equal to $1,035. Number 2. A store is promoting a new mobile phone under 2 plans, Plan A and Plan B. The plans are advertised as shown below. Part 1. Calculate the total cost of a phone under Plan A. So the total cost would be the deposit of $400 plus 12 installments of $65, and since it's 0% tax, none will be added, so this would give us $1,180. Part 2. Determine which of the 2 plans, A or B, is the better deal. So the total cost for Plan B would be the deposit of $600 plus 6 monthly installments of $80 plus the tax, which is 5%, so 5% of $600 plus 80 times 6, which is equal to $1,134. By comparing the 2 plans, we can see that Plan B is cheaper, and if we had to calculate the savings, it would be $46. Therefore, Plan B is the better deal since you would be saving $46. Let's move on to commission. So what is commission? Well, it's an incentive offered to employees by companies, and it is calculated as a percentage of the value of the goods sold. Let's look at this example. A salesperson is paid 5% commission on the selling price of a vehicle. How much will she receive if she sells a car for $35,000? We were given that the commission is 5%. So to calculate it, it would simply be 5 over 100 by the selling price, which is $35,000, and that would give us $1,750. In the second example, Lisa receives 5% commission on her first $5,000 in sales and 10% on sales beyond $5,000. What was her commission if her sales amounted to $15,500? So in this question, we see that commission increases on sales that are greater than $5,000. So to calculate the commission on her first $5,000 would be 5% of $5,000, which would give us $250. And to calculate the commission on the remaining sales, we would first have to calculate what is the remaining sales, right? So that would be 15,500 minus 5,000, which would give us $10,500. So now we are able to calculate the commission on remaining sales, which is 10% of 10,500, and that's how we'll get $1,050. So the total commission would be the sum of the two, and this would give us $1,300. Okay, let's move on to profit and loss. So we know that if an article is sold for more than its cost price, then it will be sold at a profit, whereas if it is sold for less than its cost price, then a loss is made. To calculate profit, it would be selling price minus cost price, whereas loss would be cost price minus selling price. And note that both profit and loss may be expressed as a percentage of the cost price. In example 1, Jerry bought a car for $150,000 and later sold it for $190,000. Calculate the percentage profit. To calculate the profit, it would be selling price minus cost price, which would be $190,000 minus $150,000, and that would give us $40,000. And so to calculate the percentage profit, it would be the profit over cost price by 100. So 40,000 over 150,000, since that was the cost price, times 100, and this would give us 26.7%. In the second example, John sold his phone for $3,500. He had originally paid $5,000. What is the percentage loss? Loss is equal to cost price minus selling price, which is $5,000 minus $3,500, and this would give us $1,500. And so to calculate this as a percent, we would put 1,500 over 5,000 times 100, which would give us 30%. The next topic we'll look at is hire purchase. So, instead of taking a loan from the bank to buy an item, some customers may choose to pay a company over a certain period of time. This allows a customer to get the item while still paying for it, but first a down payment is usually made, and the balance is usually paid in installments, whether it be weekly or monthly. Let's look at some examples. In number 1, the cost price of a refrigerator is $6,500. If it is bought on hire purchase, the customer must pay a down payment of 15% of the cash price and then 12 monthly installments of $475 each. Calculate the hire purchase price of the item. So we know that the hire purchase price would include both the down payment as well as the installments. So the down payment, they said it's 15% of the cash price, so 15% of $6,500, which would give us $975, and it's 12 monthly installments of $475, so $475 times 12, which is $5,700, and so the hire purchase price would be the sum of $5,700 and $975, which would give us a total of $6,675. The cost price of a laptop is $12.99. The hire purchase plan requires a $350 deposit and 10 monthly payments of $120. Part A, calculate the hire purchase price of the laptop, and Part B, calculate the amount of money saved if the laptop was not bought by hire purchase. In Part A, the hire purchase price would be the down payment of $350 and your 10 monthly installments of $120, so $120 by 10, and this would give us a total of $1,550. In Part B, the amount of money saved would be the hire purchase price minus the cost price, which is $1,550 minus $12.99, and we would get $251. The next topic we'll be looking at is simple interest. So what exactly is simple interest? It's fairly simple. So usually, financial institutions pay interest to customers who deposit money, and they also charge interest to customers who borrow money. Now, there are two types of interest rates, simple interest and compound interest. And the principal is the sum of money borrowed or invested. When calculating simple interest, the principal remains constant over the period of the loan, and the amount of interest earned or charged remains the same each year. So if the principal, P, is invested at a rate of R%, then the interest, I, for a period of 1 year will be principal times rate over 100 multiplied by time, which can also be written as principal by rate by time over 100. Let's work some examples. So in number 1, calculate the interest to be paid on a loan of $5,000 for 4 years at a simple interest rate of 10% per annum. Hence, calculate the total amount to be repaid. So to calculate the simple interest, it would be the same formula, principal times rate by time over 100. So that would be $5,000 times 10 times 4 over 100, which would be $2,000. And so the total amount to be repaid would be the simple interest plus the principal, which is $5,000 plus $2,000, and that would give us $7,000. In number 2, the simple interest on an investment of $40,000 for 3 years amounted to $6,000. What rate of interest was paid? So in this question, the interest was already given, and we need to find the rate. So we know simple interest is equal to principal times rate by time over 100. So by just plugging in the values, we would have $6,000, which is the simple interest, is equal to 40,000 times R, which is what we want to find, multiplied by 3 over 100. So to get rid of the 100 on the right side, we know we have to multiply by 100 on both sides. So we would get 600,000 is equal to 120,000 R. That's when we multiply the 40,000 by 3. And to find for R, all we need to do is divide by 120,000 on both sides. So R is equal to 600,000 divided by 120,000, and this would give us 5%. So the rate would be 5%. And this brings us to the end of part 1 of Consumer Arithmetic. We will continue in part 2.